Good afternoon, everyone. Welcome to another edition of JRBT Tax Talks. Today, we've got myself, Bob Woodard. I got Michael Brown and Connie Berry, all of us tax partners in the tax department here at JRBT. We've been following the wonderful travails of Congress over the last few days. So we thought 2020 was going to end a little bit quiet and we could kind of go have Christmas with our families, but instead Congress gave us a Christmas present as CPAs of a new tax bill. So, Merry Christmas to us, and you guys, I'm sure you'll spend all of Christmas just researching tax law, right?
It's the gift that
Absolutely.
keeps on giving this year.
Nothing
Absolutely.
I'd rather do.
Absolutely, absolutely. Well, before we get started, obviously I have to give the normal disclaimer that any and all the discussions that are had here or that you hear in this tax talk, you cannot use as tax advice. Please consult your tax accountant. Please call your specific responsible person at JRBT to kind of get some clarification. We certainly today that's very true because literally the ink has not dried. In fact, I think actually the ink has not gotten on for the president yet. As of the time we're recording this, the president, I don't believe, has signed this law yet, but all indications that he will. House and Senate both have passed it. And so therefore, we're giving you a quick overview of the 5,000-page bill. Now, I will admit not all 5,000 relate to taxes, but 5,000 pages in this thing. So I think Congress got it about 30 minutes before they voted on it. Hopefully I'm sure they read every page of it and every bit of it. But we'll give you some of the tax highlights today. And so I think first of all, we're gonna talk a little bit about the business provisions, the PPP, the new PPP loans. I think Michael Brown's going to give us a little bit of that. And so Michael, with that, take it away.
Sure. Thanks, Bob. So this bill, this round of COVID relief is about $900 billion. And it's kind of been a long and convoluted road to get here. There's been multiple proposals beginning all the way back in the summertime, and the two sides had not gotten together and agreed on a final package until last night. And so
shocking.
What happens, shocking. It seems to be the normal way to go. And one of the ways or means that it got passed is that it was attached to a bill that they had to pass, which was the normal continuing appropriations bill for the rest of the government's fiscal year. And so that's, people may see it talking about a $900 billion stimulus and a $1.4 billion appropriations for a total bill of $2.3 trillion. And so this bill has a whole lot in it that has nothing to do with COVID relief or stimulus. So that's why you'll see people going, well, this is in there and that's in there and that's stimulus. Well, it's not. 900 billion is the stimulus piece, and we're going to talk about some of those today. So some of the business provisions, primarily with the Paycheck Protection Program, a big concern of ours and a big concern of a lot of our clients was the IRS had previously come out and said that the expenses, the payroll expenses you use in order to qualify for your forgiveness are not deductible, which de facto makes your PPP loan proceeds taxable, which is contrary to what Congress's intent was, as they've said. And so there was a glitch. And so Congress has now fixed the glitch by specifically stating that all expenses used to receive your PPP loan forgiveness are in fact deductible. So they've clarified that with respect to PPP. They've clarified that with respect to EIDL. They've clarified that with respect to the SBA loan subsidies. So your expenses are deductible. That's a big deal.
Huge. That's a huge deal for our clients and taxpayers. That's an incredible tax savings and really is probably the biggest, probably for business clients, the biggest thing in this bill, to be honest.
Right.
Well, and especially as we're here at year end trying to do year end planning, people trying to spend down monies to eliminate tax bills. This is huge.
Huge. Yeah.
Yeah.
Great news. Great news.
That may have been the biggest question of the year that we got asked potentially. Yes. So beyond that, that's just a tax provision. The PPP is being reopened for new first-time borrowers, but also second-time borrowers. And second-time borrowers, well, first of all, the calculation of the loan amount is very similar to the first time. There's a few additional ways you can do it, but it will be more or less around the same amount as the first round. In order to be a second time borrower, which puts you back in the pool where you can receive another loan, another forgivable loan of about the same amount that you had before in the first round, if you have a reduction in revenue of 25% or more, if you look at your quarterly revenue during 2020 and compare those quarters to the same quarters in 2019, and if you have the same quarter decrease in revenue of 25% or greater, then you're eligible to go back for a second round of PPP and receive another loan of about the same amount. So,
Michael, is that gross revenue or is that net revenue, or I mean, do we know yet?
Gross revenue.
Okay, so if I had $100,000 of gross revenue in quarter 1, 19, if my gross revenue was $75,000 or less in first quarter of 20,
right,
I would be eligible for a new PPP loan. But if I had $80,000 of revenue in quarter 1, let's ignore the other 3 quarters, and that was the only reduction I had, I would not be eligible for a second PPP loan, right?
Correct. You got to match up first quarter to first quarter, second quarter to second quarter, third quarter to third quarter, fourth quarter to fourth quarter.
Yep.
So if any of those calculations represent a greater than 25% decrease, then you're eligible. So that's in and of itself is pretty big. So they're trying to target it for businesses that can demonstrate a loss of income. And then there's some other specific carve outs for small businesses in different communities, and it's excluding companies that are in any way publicly traded. And so they're trying to pull it down to the businesses that the Main Street businesses, the mom and pop businesses that have been affected by this.
Yeah.
And there's a 300 employee cap, which I think is less than the prior employee cap as well.
I think that's right.
And on second round, PPP loans can't exceed $2 million. So another big one that we've been dealing with our clients have been fighting and not gnawing their teeth over is the PPP forgiveness applications. Now, this new bill establishes a provision where if your PPP loan is less than 150, you will have a simplified one-page application with no documentation required to be submitted with it.
Wow.
So
that's huge.
That is very huge, because we've been going through the painful process of assembling all that documentation required by the act for those PPP loans, and it's quite daunting. So that's a big time saver for a lot of our clients.
So here's one of the questions. I'm sorry. Here's one of the questions that we've had is, do I go ahead and finish the PPP application that I've already started, or do I wait and use the simplified method? My thought is simplified method.
I mean, if I've got it all put together and I want to submit it, and I know it's right and I know it's complete, I mean, yeah, go ahead and send it. You'll get your forgiveness back within 90 days. But if you don't have it 100% tick tied and done, I'd wait and do the one pager. That's my thinking.
And that's not open yet, but it will be.
Right. The bill just tells the SBA to develop a one-page form.
Oh, good. We're waiting on SBA again.
It does not exist yet. So yeah, it will take some time for them to develop a form. Minor item, there's an expansion of the eligible expenses for PPP to include things like software, cloud computing, human resources accounting, property damage that wasn't reimbursed by insurance, PPP and other COVID-related safety costs. So in addition to payroll and some of those other things. Additionally,
but it's still calculated on payroll, right, Michael? It's not, you don't get to include those in your calculation of what loan you can get. It's only payroll is the calculation. Right. Then you could use the money to pay for these things, but.
Correct. The loan origination calculation is based purely on payroll. But before, you could include your rent and your utilities and those kind of things. So it's just expanding some of those things that are eligible. Next thing is that the eligible organizations for PPP has been expanded slightly. It includes 501c6 organizations, which are membership organizations, like your country club might be a 501c6, or your professional organization might be a 501c6. Destination marketing organizations, not sure what that is. Housing cooperatives, newspapers, broadcasters, and radio stations. And then the last thing, and some clients have asked about this a decent amount, is that the covered period definition is changing. Originally, we had an 8-week covered period for PPP, and then it got expanded to 24 weeks. And the question we always got was, well, can I cut it off somewhere in between? And the answer now is yes, you can cut it off anywhere between 8 weeks and 24 weeks. And the reason for that is a little esoteric. It goes into FTE reduction calculations and wage reduction calculations. So it gives a little more flexibility to the business owner with respect to that. That's what I got on PPP. So I'm going to kick it to Connie to talk about some more business provisions.
Thank you, Michael. That was a great quick overview of PPP loans. And so right now, let's kind of talk about the EIDL loans. That's the other major area of funding for sources or relief, if you will. And so the EIDL was originally a quick advance that was provided in the original funding agreement. And so that advance could have been from anywhere from $1,000 to $10,000 per employer. And so we have a number of employers who maybe received nothing, or we have employers who received $10,000. And so that original round of relief stopped on July 11th. It wasn't, similar to the PPP loans where we kept extending. The funding for that program stopped on July 11th. And so we have a number of clients and taxpayers who have not received any additional funding from EIDL, and a number of folks who didn't qualify. So what this program does now is allow those taxpayers to come back and grab some money currently with regards to EIDL. And so if you didn't receive anything, you may be eligible to receive up to $10,000. If you received $2,000 originally, you may have the ability to go back and receive the $8,000 that you missed out on the first time around. And so that's a win for taxpayers because that advance was not taxable and did not have to be repaid. And so I think a lot of people felt slighted when they didn't qualify for that originally. What the program now allows for as well is an additional $10,000 potentially, depending on where you're located, mainly low income communities. So those taxpayers in those areas can look to reach out and receive additional funding. If they had capped out originally, they may qualify for another $10,000 under the advance rules. This is huge.
And I'll throw something in there. The reason the EIDL grant stopped was because they ran out of money. It's not because there wasn't enough demand. And so now they're refilling the kitty and restarting the program. I expect that they'll probably run out of funding again. And so once that becomes live and available again, if you think you qualify for an EIDL that you never applied for in the first place, or if you fit the low income community and reduction of revenue situation and you did receive some, then apply to get the rest of the $10,000 that you may not have gotten. And then the other piece of it is that from the beginning, EIDL advance reduced your eligible PPP loan forgiveness. Now that is not a factor. It does not reduce your forgiveness amount.
Correct. That in itself is huge. I mean, while we're only talking about $10,000, remember we have a number of taxpayers who received $50,000 of PPP funding originally or less. And so if they got the EIDL and the PPP funding up front, that's significant to those smaller taxpayers.
Exactly.
In addition to the EIDL, the other program that's been touted has been the program related to grants for entertainment venues and really for shuttered entertainment venues. And so those venues that have a seating arena where they haven't been able to open up during COVID. And so there's a lot of those venues who are where they're either shutting down or they have a significant loss of revenue. And so there's quite a large amount of money that's been set aside, $15 billion for these event venues. Most of the funding is upwards of, correct me if I'm wrong, Michael or Bob, but $10 million, I believe.
I think the max is 10 million, and it's based on, and the amount you receive is based on a formula that is in the calculation of how much your decline in revenue was as a part of that. And it's pretty detailed, but basically they'll get some form of revenue replacement through these grants based on those calculations.
Correct. The first tranche, if you will be focusing on those who lost revenue of 90% or more. And so they receive funding over the first 14 days. The next 14 days goes to a subsequent round, which I believe is 70%, where they had a loss of revenue. And then after that, it opens up for the rest of those venues to take advantage of receiving funding. Significant for a number of businesses in town, as well as around the country. When we think about it, there was a fact that for every dollar of revenue those venues bring in, there's $12 of revenue brought into the community. And so when you look at it that way, it's significant not only for those venues, but for the communities as well. Another item that we've seen is the SBA loans that were subsidized. And so with those loans, the principal and interest payments have been extended. So there was a period of time where they were basically deferred, so you wouldn't have to make the principal and interest payments. We're seeing an adjustment to that deferral period for those SBA loans that were in effect prior to the current SBA funding that we're seeing during the pandemic. In addition, we have the employee retention tax credit. The employee retention tax credit has been impacted by this round of relief, and it's a win for most employers. So there's an extension for the credit through July 1st, 2021. And the payroll tax credit now goes from $5,000 up to $14,000. And so the credit used to be basically 50% for its calculation. Now we focus on a 70% calculation. So that's a significant difference. I think one item that we'll have to wait to see is, can you go back and amend those returns? Is it retroactive? And so I can't say that off the top of my head right at the moment, but we'll be following up more with regards to the employee retention tax credit.
We'll have to read it very closely to figure that out.
Yes. And then the other significant item, which relates to what Michael was talking about, the PPP loans, is that the employer retention tax credit is now separate and apart from the PPP loan. So employers now qualify for the ERTC and to use those wages against the PPP loan.
Good news.
So then let's really talk about a few other items that are, have been in the bill, may not be COVID specifically related, but tie into COVID relief. One is business meals. And so from a business meal perspective, we've seen in tax legislation recently that the business meals have been decreased to 50%. And now we see 100% for business meals. Very strange because it's for 2021 and 2022. It's not retroactive for 2020. And so,
Connie, I think there's a congressman or two that may own a couple of restaurants. They want some additional revenue in 21 and 22, so they're hoping the business community will come buy some additional meals because they can deduct them.
Well, and help me out here, guys, because I've already misstated it once when we were talking, but with regards to those meals, they have to be prepared in a restaurant, correct?
I think that's right. That's the way I read it, was prepared. Now, again, the devil's in the details, so we don't know 100%, but that's what it seems like.
So
I'm not sure how you prepare a meal outside of a restaurant, because to prepare a meal and sell it, don't you have to be a restaurant?
I think so.
Yes.
I don't know. Yeah, I don't know.
So
I guess if they pay you to make a peanut butter and jelly sandwich, they can't deduct it from your kitchen in your house, Connie. They can't deduct that as 100%. I guess that's just 50%.
And I mean, that sounds reasonable, right? Come on.
Yeah, absolutely.
exactly. So then the other big item for businesses is really the tax extenders. So we all wait here at the end of the year to see what Congress is going to allow going into the next year, or maybe even retroactively for the current year. And so there are a number of extenders that are in this appropriations bill. Those extenders apply to new markets credits, energy credits, you name it. If it's usually one of the extenders, it's been extended. The big item, work opportunity tax credit. So lots of items that are in here that may apply to you, may not, but if you're normally in that category, you'll want to read up on it.
Yep.
Yeah, we don't have time to go through all those right here.
No.
But it is the usual suspects as far as the slew of things that wait till the last final moment of the year to get extended.
Yep.
So Bob, will you keep us going and talk about some of the individual provisions?
So I get the exciting individual provisions that are some make a lot of sense, and quite frankly, just like every other piece of tax legislation, some don't 100% make sense yet, but we'll figure them out. But the first thing I wanted to mention is that not directly tax related, but certainly on an individual front, a very important aspect of this is they did extend for 11 weeks the increased unemployment benefits, and so therefore the government is going to supplement your state unemployment. Obviously, we're in Texas, so if you're in Texas and have unemployment, you're getting the money from the state of Texas for your unemployment. The federal government is going to subsidize, and therefore you will get an additional $300 per week. Now, before, I believe, correct me if I'm wrong, it was $600 a week, I think, was the original CARES Act, but now in the new coronavirus extender, or whatever they're calling that, pandemic relief, it's $300 a week now for 11 weeks. We don't know exactly when that's going to start. I don't think. We may, and I haven't seen the details, but so if one of you sees that, correct me, but I'm not certain we know when it's going to start yet. But very important for our folks who are unemployed. That's a significant, keeps them going, hopefully, here at the beginning of the year. The other thing that's already been highly publicized in the news, I'm sure everybody already knows, is the direct payments to individuals. These are your stimulus checks that we received earlier this year, or some received. That number this time is going to be $600 per individual and qualifying child. Now, last time you got $600 for both the husband and wife, or taxpayer and spouse, and then for the dependents, for the children, you got a lesser amount. Well, now this time everybody's getting $600, and the qualifying child is a child under 17. So there is a little donut there. So if you have children that are over the age of 16 and not filing their own tax return, I'll raise my hand. Connie, you're in that boat too. So if you've got children who are still dependents but yet not under the age of 17, they don't get a stimulus, and so those folks don't. But they're the only ones that don't, except for the phase out. We'll talk about the phase out in a minute. That phase out is so that if your income is a certain level, you start phasing out the $600 per person, and it's a percentage, and it's a sliding scale. That phase out for single folks, it starts at 75,000 and it's fully phased out at 87,000. So if you're a single individual and you make more than $87,000, your stimulus is phased out and you will get nothing. If you're under 75, you'll get the full 600. For married filing joint, the phase out begins at 150,000 and finishes at 174,000, I think is what I'm looking at, right? Mm-hmm. So at 174,000, if you're married, you will get no stimulus. If you're under 150, you'll get the full stimulus for you, spouse, and the qualifying children. So that's good news. We don't know exactly when those are coming out. We presume they're going to be kind of like the last time. It'll kind of be a rolling deal. But I know after a certain period, if you haven't received it, you have the opportunity to get that. I think I saw where you will have the opportunity to get that stimulus on your 2020 tax return if you don't get it by a certain date. I don't remember what that date is, but it's sometime in February, I think.
And
Well,
I think
and
the
that's-
Treasury Secretary, piped up and said people will have money before the end of the year.
Yeah.
No idea.
Well, and it's really a win because originally when they started talking about this second round, they were looking at the income limits being 45,000 for single as the phase out period and 90,000 for married filing joint. So there's a number of taxpayers who received a win by them keeping the phase outs relatively similar to the prior go round.
Now, one thing I will tell folks is in the first round they ended up using some debit cards and some credit cards that they'd send out. So folks, be careful, pay attention to your mail over the next few weeks, because there are some folks who threw away those things thinking they were fraudulent, but that was their stimulus payment. It was in a debit card or a credit card. And so we don't know how it's going to come yet, but we may, but I haven't seen it. But just be careful in your mail. Don't just throw away anything that looks junk. Make sure you open it, make sure it's not yours. Now be careful of scams, but make sure you don't throw away that stimulus payment. So, all right.
So there could be taxpayers on their tax return who end up receiving the first round, the $1,200 plus another $600
Possibly.
if you're single, because you didn't qualify based on your prior year return.
Right.
So they're going to be winners this tax season.
Right.
Yep.
A couple other things that are smaller but still important: the child tax credit, which that's the $2,000 per child that we get for dependent children, and then the earned income tax credit. They're actually going to look at the 2019 income level to determine those credits for 2020. So that's going to be a really confusing computation, but know that here at JRBT we'll be doing that for you. We have that information. We can do it and handle it, but just be careful that you use the right year for your eligibility for those two credits. Another really big one, though, is the charitable contribution rule. So with the CARES Act that was passed earlier this year, which was the first round of coronavirus legislation, the CARES Act gave us all a $300 charitable contribution. Assuming you make an eligible charitable contribution, if you don't itemize, you still get to take $300 of your charitable contributions on page one and reduce your income. So you get your standard deduction plus $300 of your charitable contributions. Well, now in this bill, they've changed that so that in 2021, you'll get $300 for the taxpayer and $300 for the spouse. So if you're married, you get $600 in 2021, in addition to your standard deduction for charitable contributions. If you're single, you'll still get $300. So it's $300 per adult filer on your tax return. So that's good. That's a nice thing. It's not a huge deal, but it is at least nice. So you do want to make sure you get that $300. We would encourage everybody to try and give away here at the end of the year. Our nonprofits are really struggling, and they really could use your support, every one of those nonprofits. So whatever your heart is, we would really, JRBT, encourage you to try and help out those nonprofits, especially in our Waco, Central Texas community. Please consider that.
Agreed.
Another thing is the flexible savings account. So that your medical flexible benefit account, usually that doesn't roll over. If you don't spend it, you basically kind of lose it each year. They have now decided that any unused balance in 2020 can carry over to 2021, and any unused balance in 2021 can carry over to 2022. Just in a way to get people a little more money in case they, will help with basically you can kind of roll that money in, have some extra money sitting there the next couple of years. You don't have to use it here by the end of the year, which is a good thing. I don't know that it hugely affects anybody's life, but it certainly is a benefit. And then the last thing I want to talk about is the employee side payroll tax deferral for those clients and those businesses that have decided to take on that. This is really kind of the business that's doing this. They can defer making the payments for your payroll taxes, defer those. It was until April 2021. Now they've deferred that to where they can hold off and wait until December of 21, December 31st of 21 to make those payments. So again, just ability to have the use of that cash for a little longer. Be careful on that because you do have to pay the payroll taxes still, but you do have the ability to defer that a little bit longer. So that's a pretty quick highlight, guys. And there's a lot more in here because there's a lot of words in those bills, but that's kind of what we gleaned, and hopefully that's a good idea. Connie, you have anything else?
I think basically I don't have anything from my part with regards to EIDL. Michael, do you have anything from a PPP standpoint?
No, I think we covered the waterfront of the provisions that are in that bill. I just want to thank everybody for joining us, and feel free to reach out, give us a call or email if you have additional questions on this. Anything piques your interest here, or is of concern to you. So thanks again.
Yep. Thanks for joining us, guys.
Thank you.